Welcome back to the channel. Today I'm breaking down a powerful clip from Dan Ives, Global Head of Tech Research at Wedbush Securities, where he warns that we are entering the next stage of the AI revolution. I'm going to play the CNBC clip, then I will walk you through my full reaction, and what his comments really mean for investors right now. After the clip, I will give you an in-depth breakdown and my analysis of the 3 best tech stocks to buy today if you want to play this AI cycle. Smash that like button, let's get this to 1,000 likes, share the video, and drop your thoughts in the comments below. Don't forget to subscribe so you do not miss the next big investing update. Alright, let us hear what Dan Ives has to say.
Wedbush's Dan Ives joins us here on set. He just released his 2026 outlook, forecasting 20% upside for the tech sector next year. When we say tech sector, define it. All of the NASDAQ, Mag 7 names, what are you seeing?
I think big tech, if I think about like big tech in the AI trade, that's probably going to be up anywhere from 20 to 25%. But I think it's really the AI revolution stocks. What I view as sort of the winners, up 20% at a minimum. Look, it's my view, this is just starting the next stage of the AI revolution. I mean, all of our checks are showing, even in the last 3-4 weeks, about 20-25% of deals are actually accelerated from the hyperscalers. So that's why I view it from software to cybersecurity, the infrastructure. I continue to view it as, this is just the beginning of the monetization of the AI revolution.
What do you make of these deals that, excuse me, that NVIDIA has been making in terms of investing in a partner, which is basically a customer? Because in this case, the deal is that Synopsys will use CUDA, and so will become a paying customer. So they're investing $2 billion in stock in order to gain this customer. At some point, do you question that, or is that all fine?
Look, I mean, as someone like myself that covered tech, late 90s vendor financing, so obviously, worries, is that a red flag? Look, I view it as, this is an AI arms race in terms of everything that's playing out. So for NVIDIA, for OpenAI, for what we see AMD and others, like they're putting stakes in the ground. I view it as, for every dollar they spend, they're getting back $8 to $10. Now, in the near term, there could be questions until it plays out. But I think we're going to look out 2, 3, 4 years at these deals. And that's how, like NVIDIA, they're going to continue to be like, that's the one chip in the world that's fueling the AI revolution. And I don't see that slowing down. That's why I love everything Jensen's doing.
Were you surprised? I was. I'm curious that Synopsys didn't trade better today, understanding that stock went from 650 to 420 in a straight line. That announcement today, $80 billion company, $2 billion investment. I would have traded well. I thought it would have traded a lot better than it did today.
Yeah, look, I think, if you look at Oracle, the $100 dip ever since OpenAI, the view almost like good is bad. Like being associated in NVIDIA, OpenAI, is that like a too big to fail moment? But I think we're going to look out, like, I'm surprised the stock didn't trade higher. I think there's something where I view that as more of an opportunity. Given my view, like that's one of those sort of second, third derivatives of this AI revolution trade into 26.
So, Dan, on the peripheral, so look at Palantir. It's been a name that you've been bullish on. It's been hammered right after earnings. Is this one that you doubled down on, given the valuation, where it's just so outsized for everyone to actually look at it and think that they want to buy it even cheaper than it was, but it's not really substantially cheaper? Do you buy it here?
I mean, Steve, to me, you triple down. Because it's my view on Palantir. I get it's expensive today, but in the next 2-3 years, I think there's a $1 trillion market cap because 20-30% of all the deal flow, the trillions of dollars being spent on the use cases, I mean, they're playing a different game in terms of any AI use case in the enterprise, Palantir's first call. So that's still not reflected in the stock, and I get it's super expensive and it's become sort of an emotional bull-bear debate, but I think there's a stock that, we've talked about 200, 225, 250 in terms of my view where it goes.
Right from the beginning, Dan Ives made it clear that in his view, big tech is still in the early stages of a much larger AI revolution. He is calling for about 20 to 25% upside in big tech next year, and he was not vague about where he thinks that upside is coming from. The way he framed it, this is not just a continuation of the current rally. He believes we are entering the next stage where real monetization kicks in. Revenue, deal flow, enterprise spending, AI workloads and software adoption are all accelerating faster than people realize. He even mentioned that just in the last 3 to 4 weeks, his checks show that roughly 20 to 25% of deals from the major hyperscalers have actually sped up. That tells you that demand is not cooling off. If anything, companies are rushing in faster. He kept coming back to this theme that we are still in the very early innings. In his mind, software, cybersecurity, infrastructure and everything tied to AI is only beginning to show its real value. This is why he insists that the winners in this space could see another 20% upside at minimum. What he is really saying is that Wall Street is still underestimating how big this shift will be, and that the economic impact of AI is about to expand far beyond the handful of names currently leading the charge. Then the conversation shifted to NVIDIA and their move to invest $2 billion in Synopsys. This is where Dan Ives drew from his experience covering tech since the late 1990s. He pointed out that back then, deals like this would raise concerns about vendor financing, or companies artificially boosting their sales numbers by subsidizing customers. But Ives does not see this as a red flag today. He framed it as part of an AI arms race where every major player is establishing long-term strategic positions. He believes that when NVIDIA puts $1 into a relationship like this, they are getting $8 to $10 back in value over time. In other words, this is not NVIDIA throwing money around just to secure a customer. This is NVIDIA making sure it controls the workflows and software ecosystems that fuel the next wave of AI development. He even said that when we look back 2, 3, or 4 years from now, these deals will make perfect sense. He sees NVIDIA continuing to dominate as the one essential chip powering the entire AI revolution. That is why he is so supportive of Jensen Huang's strategy. One of the surprising parts of the interview was when they discussed Synopsys not trading higher after the announcement. Considering the stock dropped from 650 to 420 earlier in the year, you would expect news of NVIDIA committing $2 billion to boost sentiment. Dan Ives admitted he was surprised too, but he also said that this is the kind of market reaction that creates opportunity. He sees Synopsys as one of those second and third tier beneficiaries of the broader AI revolution, meaning companies that may not be in the spotlight now, but will capture substantial value as demand scales into 2026. So in his view, Synopsys not popping higher is not a negative signal, it is a setup. Then the conversation shifted to Palantir, and here is where Dan Ives got extremely bullish. The interviewer basically asked if this is a moment to double down, given how hard Palantir sold off after earnings. Dan Ives did not hesitate. He said you triple down. He acknowledged that yes, Palantir looks expensive today, but he argued that the price today does not reflect where the company will be 2 or 3 years from now. He is projecting a $1 trillion market cap potential because of how deeply Palantir is embedding itself into enterprise AI use cases. He said that when it comes to the trillions of dollars expected to flow into AI workloads, development, infrastructure, and automation, Palantir is becoming the first call for enterprise customers. That means government, defense, logistics, manufacturing, healthcare, and any other sector trying to tap into AI at scale. His argument is that Palantir is not playing the same game as everyone else. Their platform is so specialized and so advanced that they essentially sit ahead of the competition in real workflow deployment, and that dominance is not priced into the stock yet. So when he says triple down, he is saying that the long-term outlook massively outweighs whatever short-term valuation concerns people are focused on today. The key takeaway from Dan Ives throughout the entire interview is simple. He believes that Wall Street still has not fully grasped the scale of what AI spending will look like. He believes the adoption curve is accelerating faster than expected. He believes hyperscalers, software giants, chip makers, and infrastructure providers are about to experience the next major revenue wave. And he believes the stocks that look expensive today might end up looking cheap in hindsight once the real monetization cycle kicks in. He is calling for a big year ahead in tech, but not because of hype. He is calling for it because enterprise spending is starting to show, deals are speeding up, and companies like NVIDIA, Synopsys, and Palantir are positioning themselves as essential infrastructure for this new era of computing. So that is the real message behind everything Dan Ives said. The AI trade is not cooling off. It is not peaking. It is entering a new phase, and he wants investors to understand that the next few years could be defined by massive structural growth in the tech sector. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now, let's dive into the 3 best tech stocks to buy now. First up is Vertiv Holdings Company, ticker VRT, the hidden giant powering the digital world. While you may not see their name splashed across your favorite apps or devices, Vertiv is the silent force making sure the entire internet runs smoothly, every second of every day. Their influence stretches across continents, quietly supporting the backbone of our digital lives. You may not know them, but every time you stream your favorite show, post a photo, or hop on a video call with friends or colleagues, Vertiv's technology is working tirelessly behind the scenes. Their systems ensure that your data travels instantly and securely, no matter where you are in the world. From the moment you hit play to the second your message is delivered, Vertiv is there, making it all possible. They're the backbone of digital infrastructure, keeping data centers for Amazon, Google, and Microsoft running 24/7. These aren't just any data centers, these are the nerve centers of the modern world, processing billions of transactions, searches, and communications every single day. Without Vertiv, the digital giants we rely on would grind to a halt. Their specialty? Industrial-scale cooling and power solutions, absolutely essential as AI and cloud computing explode. As servers become more powerful and densely packed, they generate enormous amounts of heat. Vertiv's advanced cooling systems are the only thing standing between seamless operation and catastrophic failure. Their power management solutions keep the lights on, even when the grid is under stress. The AI revolution is driving a massive surge in data center demand, and AI chips run hotter than ever. Vertiv's advanced liquid cooling tech is the answer. These systems use cutting-edge engineering to draw heat away from the most powerful processors on the planet, allowing them to run at full speed without overheating. As artificial intelligence becomes more central to everything from search engines to self-driving cars, Vertiv's role only grows more critical. As companies race to build AI, Vertiv's order book is booming. Their products are non-negotiable for the world's biggest tech players. Every new data center, every AI upgrade, every cloud expansion, Vertiv is there, providing the essential infrastructure that makes it all possible. Their manufacturing plants are running at full tilt, shipping out the next generation of cooling and power systems to customers around the globe. Think of Vertiv as the picks and shovels of the AI gold rush, selling the tools every miner needs. In every technological revolution, it's often the suppliers, the ones providing the essential gear, who quietly rack up the biggest wins. Vertiv doesn't need to bet on which AI company will come out on top. As long as the world needs more computing power, Vertiv wins. Their financials are surging, growing backlog, accelerating revenue, and expanding margins. Investors are starting to take notice, but the real story is in the numbers. Vertiv's order pipeline is swelling as demand for data center infrastructure explodes. Their ability to scale production and deliver on time is setting them apart from the competition. This isn't a speculative startup. It's an established leader with a huge moat. Vertiv's decades of experience, global reach, and deep relationships with the world's largest tech companies make it nearly impossible for new entrants to catch up. Their technology is trusted, their brand is respected, and their track record is proven. The market is waking up, but we're still early. Every new AI server needs Vertiv's gear. The growth runway is immense. As more companies invest in digital transformation, cloud computing, and artificial intelligence, the demand for Vertiv's solutions will only accelerate. The scale of this opportunity is hard to overstate. Vertiv isn't just about AI. Cloud, 5G, and IoT all depend on their infrastructure, giving them stability and long-term upside. As the world becomes more connected, the need for reliable, high-performance data centers grows. Vertiv is positioned at the intersection of every major tech trend, from the rollout of 5G networks to the explosion of smart devices and the rise of edge computing. Their reputation for reliability is priceless. Minutes of downtime can cost millions, so the biggest companies trust Vertiv. In the world of data centers, uptime is everything. Vertiv's systems are engineered for maximum reliability, with redundancies and fail-safes built in at every level. That's why the world's most demanding customers keep coming back. Yes, the stock isn't cheap, but for this kind of dominance and growth, it's worth the premium. When you invest in Vertiv, you're buying into a company with a proven business model, a massive addressable market, and a track record of execution. Sometimes paying up for quality is the smartest move you can make. They're expanding manufacturing to meet demand, showing real confidence in the future. Vertiv isn't just sitting back and collecting orders. They're investing in new facilities, hiring more engineers, and ramping up production capacity. This is a company that's planning for years of growth ahead. Vertiv has grown into a major data center infrastructure play with a market capitalization of roughly $69.79 billion, earnings per share of about $2.65, and a price-to-earnings ratio in the high 60s. Last year, the company recorded around $8 billion in revenue and nearly $496 million in net income, which signals improving profitability as demand for data center cooling, power, and infrastructure ramps with AI-driven capacity needs. This is not a hobby business anymore. It is infrastructure that hyperscalers and cloud providers must buy, and the numbers show both meaningful top-line growth and a move towards stronger earnings conversion as the company scales. In summary, Vertiv is the undisputed leader in mission-critical digital infrastructure, the primary beneficiary of the AI and data center boom, and a company with a massive competitive moat. Their products are essential, their customers are the biggest names in tech, and their growth prospects are unmatched. If you're looking for a way to invest in the future of technology, Vertiv is a name you can't ignore. Don't sleep on this one. While others chase flashy software, the real money is in the essential infrastructure. The companies building the digital world need Vertiv's solutions, and that demand isn't going away anytime soon. Infrastructure may not be glamorous, but it's absolutely vital, and that's where the biggest opportunities often lie. Vertiv is a giant hiding in plain sight, and the first stock on our list. As the digital world grows, so does Vertiv's importance. They're not just keeping up with the future, they're building it, one server rack at a time. Now, let's move to our second company, the nervous system of the tech world. Our second pick is Datadog, ticker DDOG, the all-seeing eye of the cloud. In today's digital-first world, where every business relies on technology to connect with customers, Datadog stands out as the silent guardian behind the scenes, ensuring everything runs smoothly. Whether you're streaming a movie, shopping online, or playing a game, there's a good chance Datadog is quietly monitoring the systems that make it all possible. Imagine running a massive website with thousands of servers and millions of users. How do you spot problems before they crash your site? That's where Datadog comes in. In a world where even a few minutes of downtime can cost companies millions, having real-time insight into every layer of your technology is absolutely critical. Datadog's platform acts like a digital nervous system, constantly scanning for issues, bottlenecks, or security threats, often before anyone even notices a problem. Datadog is a leader in observability, giving companies real-time visibility into their entire tech stack, from servers to apps to cloud services. This means IT teams can see exactly what's happening, when it's happening, and where it's happening, all from a single pane of glass. No more guessing games or scrambling to piece together clues from different tools. Datadog brings everything together, making it easier to keep digital services fast, reliable, and secure. Before Datadog, finding issues meant hours of digging through logs. Now it's instant alerts and actionable insights. IT teams can respond to incidents in seconds, not hours, reducing downtime and keeping customers happy. This shift from reactive to proactive monitoring is a game changer, especially as businesses become more dependent on digital infrastructure. As businesses shift to the cloud, complexity explodes. Datadog was built for this world, giving it a huge edge over legacy competitors. Traditional monitoring tools struggle to keep up with the scale and speed of modern cloud environments, but Datadog was designed from the ground up for flexibility and scalability. Whether a company is running a handful of servers or managing a global network, Datadog adapts seamlessly. Their land and expand model is brilliant. Companies start with one product, then quickly add more. That's why existing customers spend 30% more each year. Datadog's platform is modular, so as a business grows or faces new challenges, it can easily add new features like security monitoring, log management, or application performance tracking. This creates a virtuous cycle. The more customers use Datadog, the more value they get, and the more they invest. Datadog turns raw data into insights, helping businesses run faster, more reliably, and more securely. It's not just about spotting problems, it's about empowering teams to make smarter decisions, optimize performance, and innovate with confidence. In a world where data is king, Datadog is the trusted advisor that helps companies unlock its full potential. They're constantly innovating, recently adding security monitoring to their platform, making them a one-stop shop for IT and security teams. This means companies can monitor their infrastructure, applications, and security posture all in one place, breaking down silos and improving collaboration. As cyber threats become more sophisticated, this unified approach is more valuable than ever. Financially, Datadog is a machine. High growth, 80% gross margins, and sticky recurring revenue. Their subscription-based model means predictable income, and their rapid customer expansion drives impressive top-line growth. Investors love this kind of business. It's resilient, scalable, and built for the long haul. As systems get more complex with AI and microservices, Datadog's platform becomes even more critical. Modern applications are made up of hundreds of interconnected parts, often running in different clouds or data centers. Datadog helps teams see the big picture and the tiny details, making sure nothing slips through the cracks, even as technology evolves at breakneck speed. Their customer list includes gaming giants, banks, and e-commerce leaders, all relying on Datadog to keep their digital services running, from processing millions of transactions per second to delivering seamless entertainment experiences. These companies trust Datadog to safeguard their reputation and bottom line. The diversity of Datadog's customer base is a testament to the universal need for observability in the digital age. Investing in Datadog is a bet on the unstoppable digital transformation of our economy. As more businesses move online and embrace the cloud, the demand for reliable, scalable monitoring will only grow. Datadog is perfectly positioned to ride this wave, capturing more market share as digital transformation accelerates across every industry. Their leadership is visionary, their culture attracts top talent, and their unified platform is unmatched. Datadog's founders and executive team have a track record of innovation and execution, and their commitment to building a great place to work has helped them attract some of the brightest minds in tech. This combination of vision, talent, and culture is a powerful engine for long-term success. Datadog's market cap is roughly $53.65 billion, its diluted earnings per share are about 31 cents, and its trailing price-to-earnings ratio sits in the hundreds, reflecting the market pricing and high future growth expectations. In 2024, Datadog generated about $2.68 billion in revenue and just under $184 million in net income, which tells you this is a company moving towards sustainable profitability while still investing aggressively in product and go-to-market. The sky-high multiple is a bet on continued expansion of enterprise cloud observability spend, and Datadog maintaining its leadership as companies instrument every layer of their AI and cloud stacks. In summary, Datadog is the leader in cloud observability, with a sticky business model, relentless innovation, and a massive, growing market. Their ability to adapt, expand, and deliver value to customers sets them apart from the competition. As the digital world grows more complex, Datadog's role as the all-seeing eye of the cloud will only become more vital. DDOG is our second future giant. With its unique position at the heart of the cloud revolution, Datadog is poised to shape the future of technology for years to come. Now, we've covered infrastructure and software, but what about the chips powering it all? Let's talk about our third and final pick. Our final pick is Taiwan Semiconductor Manufacturing Company, TSMC, ticker symbol TSM, the world's most important chip maker. TSMC isn't just another tech company, it's the silent engine behind nearly every piece of modern technology you use. From the moment you wake up and check your smartphone, to the computers powering global finance, to the cars driving on smart highways, TSMC's chips are everywhere. The scale and influence of this company are almost impossible to overstate. If TSMC disappeared overnight, the global economy would grind to a halt. Imagine a world where your phone, your car, your laptop, and even the servers running the internet suddenly stopped working. That's the level of dependence the world has on TSMC. The ripple effects would be catastrophic, impacting everything from healthcare to transportation to national security. TSMC manufactures the vast majority of the world's most advanced chips, producing billions of semiconductors every year. Their factories, known as fabs, are marvels of engineering, operating 24/7, filled with robotic arms and precision machinery, and kept cleaner than a hospital operating room. These fabs are where the future is literally built, 1 nanometer at a time. Every iPhone, every NVIDIA GPU, and countless other devices rely on TSMC's unmatched manufacturing prowess. Whether it's the latest flagship smartphone, a high-performance gaming PC, or the advanced electronics in electric vehicles, TSMC is the invisible force making it all possible. Their chips are the brains behind the world's most innovative products. Unlike companies like Intel or Samsung, TSMC doesn't design its own chips. Instead, it has perfected the art and science of manufacturing, focusing solely on producing chips for other companies. This specialization has allowed TSMC to stay generations ahead of its competitors, setting the gold standard for quality, efficiency, and technological advancement in the semiconductor industry. Their lead in nanometer technology is staggering. TSMC's relentless pursuit of miniaturization means they can pack more power into smaller chips, enabling faster, more energy-efficient devices. This edge isn't just technical, it's strategic, giving TSMC a near-insurmountable advantage in a fiercely competitive industry. While other chipmakers are still struggling to master 7-nanometer technology, TSMC is already mass-producing 3-nanometer chips and is pushing the boundaries toward 2-nanometer and beyond. This relentless innovation keeps them at the forefront of the industry, setting the pace for everyone else to follow. Building a semiconductor fab isn't just expensive, it's one of the most complex engineering feats on the planet. Each facility costs tens of billions of dollars and requires decades of accumulated expertise. TSMC's moat is nearly unbreakable, protected by both financial firepower and a deep well of technical know-how that few can match. The AI boom is a tidal wave for TSMC, as artificial intelligence becomes the backbone of everything from cloud computing to autonomous vehicles. The demand for advanced chips is exploding. TSMC is at the epicenter of this revolution, supplying the critical hardware that makes AI possible. They're the only company able to produce the most advanced AI chips at scale, giving them incredible pricing power and making them indispensable to tech giants like Apple, NVIDIA, and AMD. Without TSMC, the AI revolution would stall before it even began. Geopolitical risk is real, especially with so much of the world's chip supply concentrated in Taiwan. But TSMC is taking bold steps to diversify, building new fabs in the US, Japan, and Europe, often with the backing of governments eager to secure their own chip supply chains. This global expansion is a strategic move to ensure resilience and stability for the future. Their near monopoly on advanced chip manufacturing makes TSMC the ultimate gatekeeper of the AI revolution and the digital age. The security and secrecy surrounding their operations are legendary, with every chip treated like a crown jewel. Financially, TSMC is a fortress. The company boasts a pristine balance sheet, massive free cash flow, and a solid, growing dividend. Their financial discipline and operational excellence have made them a favorite among long-term investors seeking both growth and stability. Demand for semiconductors is a secular growth story. Everything is becoming smart: homes, cars, cities, even everyday appliances. TSMC sits at the very center of this transformation, enabling the connected world of tomorrow. TSMC is a $1 trillion+ semiconductor foundry powerhouse with a market cap around $1.51 trillion and an earnings per share figure in the neighborhood of $9.67 when converted to US dollars. Its price-to-earnings ratio is roughly 30, and in fiscal year 2024 the company reported consolidated revenue of about 2.89 trillion new Taiwan dollars and net income north of 1.17 trillion new Taiwan dollars, showing extraordinary margin strength and massive cash generation. When you think about AI chips, high-performance nodes and foundry allocation, TSMC is the backbone of the global semiconductor supply for logic and advanced packaging, and those financials reflect not only scale, but pricing power and profitability in an environment where demand from AI and cloud customers is surging. Investing in TSMC is like investing in the entire tech ecosystem. From Apple's iPhones to NVIDIA's GPUs to the next wave of AI startups, TSMC's chips are the common denominator powering innovation across the board. Their relentless investment in research and development keeps them ahead of the curve. TSMC's culture of excellence, precision, and innovation is unmatched, attracting the brightest minds in science and engineering from around the world. In summary, TSMC is the world's dominant semiconductor foundry, essential to every major tech trend, from AI to 5G to autonomous vehicles. It's a blue-chip company with huge growth ahead, and its influence will only grow as technology becomes even more central to our lives. These three companies, Vertiv, Datadog, and TSMC, cover the foundation, the software, and the chips powering the future. Together they form the backbone of the digital world, each playing a critical role in the next era of technological advancement. A combination of these stocks gives you incredible exposure to the next decade of technology. As the world becomes more connected, automated, and intelligent, these companies are poised to lead the way, making them essential holdings for any forward-thinking investor. There you have it: Vertiv, Datadog, and TSM. Three powerhouses building tomorrow's world. Want to level up your investing? Check out my Value Stocks Investing Master Course. Learn to spot undervalued companies and build real wealth. For exclusive tips, deep analysis, and real-time alerts, join the StocksGalore Patreon. Link in the description. Which of these three stocks excites you most? Let me know in the comments, and don't forget to like and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one. Your future self will thank you.